More now on the sudden departure of Berkshire's David Sokol and the timing of his exit. Joining me now is former SEC Commissioner Paul Atkins from Washington. Atkins is now with Sphere Consulting. He's a partner at that firm. And Commissioner, the timing here seems to be key because we are talking about Berkshire Hathaway acquiring a firm in which this director at Berkshire purchased shares just weeks ahead of that acquisition. We know the SEC is reviewing this. Should we expect an investigation?
Well, I think almost anytime you have unusual trading around an acquisition, there are exception reports that get kicked out by the various stock exchanges and then get reported to the SEC. So something like this would probably be what they would look into. Whether or not it is inside trading depends on the facts of the matter, and obviously we don't know all the facts yet.
Right, but this would fall under what you would define as unusual trading, given the timing or given his office?
Well, he's an insider at a company, and he bought shares in a company that he believed in, and that would be a future target. So that in itself is not inside trading. Companies all the time before they launch a takeover will buy shares of their intended target, go right up to maybe just under 5% where they'd have to disclose, and then they launch their tender offer. There's nothing at all wrong with that. The unusual thing is here, obviously, he bought it apparently for his personal account, which itself is not necessarily bad. I think it depends on what the policies of the particular company, his company in this case Berkshire Hathaway, might be, what they view as personal trading or maybe self-dealing by insiders. But on the surface, it doesn't really seem like inside trading for an illegal that the SEC would go after.
Right, and looking at the Buffett statement, or the letter as we're referring to it, explaining the departure of Sokol, the time and the dates of the disclosure of just when this officer, Sokol, revealed to him his own ownership of shares in Lubrizol, it's very specific in how he lays this out. At the same time, Berkshire trying to get ahead of this, disclosing the sale and the purchase of those shares themselves. Is this something that Berkshire can, for lack of a better term, manage their way through? Is this truly a risk?
Well, I think, again, it depends on the facts. I mean, Mr. Buffett says that he laid all the facts out in that. It is an unusual departure press release, I'd have to say, to cover about, half of the release covering this particular issue. So that in itself is a bit unusual. But it seems like what they're trying to do is manage the issue and lay to rest any claims.
Should a top executive at a company be able to trade in a private account shares of a company that they may or may not have a future intention of acquiring? I mean, is there any sort of, maybe not illegal, but it smells bad, it feels unethical element to you?
Well, I mean, I think it depends on the company and the circumstances. If this were if he were a trader managing money of customers, like at a hedge fund or a mutual fund or something like that, those sorts of firms have very strict rules about personal trading, and they have all sorts of IT systems to monitor what people are doing in their own account. But different firms have different policies. Some folks want to have people invest side by side with a fund. Here, this was perhaps done ahead of time, so there might be questions about that. But in general, I think the SEC has specific rules with respect to what is or is not appropriate for fiduciaries to do. The law has been built up over centuries in that respect. And in this case, he wasn't managing a fund. He's inside at a corporation. And so there are, it depends really on how that corporation's run and what sort of internal policies they've set up.
Right. Well, I want to quickly switch gears here because I know you were listening in right before this break. One of my colleagues was reading through some of the documents that Bloomberg just obtained moments ago from the Fed in regard to the discount window and borrowing by banks during the crisis. Tremendous amount of borrowing by foreign banks in this initial read. How does that strike you?
Well, obviously, as the point was made before, this is a global financial marketplace nowadays, and so that's probably not so unusual. I think we have to see what else comes out, and I can't wait to look at the list. As you know, I was on the Congressional Oversight Panel for the TARP program,
That's
and
right.
we were overseeing that particular program. And I do find it ironic. This is a good illustration of how the Treasury is out there claiming that the TARP program has made the taxpayers basically a profit of $20 billion or so. I think that's a complete misrepresentation of the entire program. In fact, the taxpayers have lost hundreds of billions of dollars on the financial crisis itself, especially through actions by the Federal Reserve and the FDIC and the Treasury itself in supporting Fannie Mae and Freddie Mac and taking in through the discount window and elsewhere mortgage-backed securities, subprime loans, and those sorts of things. So it'll be interesting to look into this, but I think it truly takes to task the claims by the Treasury in this matter.
No, it's an interesting point, and it's going to be a tremendous story to continue to work through. Thank you very much, Commissioner. Appreciate it.
Thank you, Margaret.